It's our first podcast together.
It is.
We've done a lot of these like in-pitch meetings with clients.
A lot.
Investors.
Yes.
Everybody in between, but never a podcast.
Nope.
Now I have to look into your eyes while we do this. Usually you're on a video screen on the other side.
Or sitting next to me.
Yeah, I think we've done more like over the screen.
Yeah, like
Hotel rooms next to each other even as well, right?
yeah, that's right. You're cramming into the same screen talking to someone. Yeah.
My trick is to like put a screen in front of all the people, like moving around, because I don't really need to see all the things. I just like look at a blank screen. I'm like, I don't know. You can hear my voice. I'm here, but like I'm actually just looking at nothing.
Everybody has a technique.
Yeah, right. What do you use?
My technique is actually to look and focus on one space. I will sometimes even look at myself so I don't get thrown off by the other people.
Really?
Whatever's going on in their screen. Yes.
Oh.
And the countless numbers of these discussions that we've had.
Yeah.
You got to have an operating mode with how you do them, because how many do you think we've done now?
A couple hundred at least.
Yeah.
I mean, when we were doing the whole Cardano debt potential last summer/fall, that was just ripping them off like 7 or 8 a day. So
Absolutely.
different time zones. You're trying to catch the Asia time zones, European time zones.
Yes.
And this is it. This is like the investors are global. So you have to do all time zones, all everywhere.
Absolutely.
Thankfully, you and I are kind of close to time zones.
Yeah.
Generally works.
Those 3 hammers are tough.
Tell me about yourself. Who are you?
Who is Ryan Davis? We probably should do introduction.
All right. Yeah, go ahead.
So Dan, please.
Yep. So hey, I'm Dan Singleman, the CIO of the Hoskinson Family Office. That's Charles Hoskinson, the co-founder of Ethereum, founder of Cardano, and founder of Midnight. I have been in the company 4 years, and I'm responsible for all the assets and investments from public equity, fixed income, alternatives, venture, all sorts of fun things in between, and tokens. We have lots of tokens, right? Because we create these digital ledger technologies, blockchains, and then we have to go and deploy those and make a return on our asset and capital. So that's it. Before this, I was at BNP Paribas Global Asset Management for 15 years. As a global bond portfolio manager. So I started in subprime. I've moved kind of through govies, corps, EM local, hard currency, everything in between. Nothing's been more visceral than subprime. That was a challenging time in my career. I started in 06 and got dropped right into the deep end. Crypto's been fun, we'll say, but it's nothing near as challenging as subprime was. So that's kind of my backstory.
Well, very good. Wait, you're a chief investment officer.
Correct.
I am too. So, yes.
So, Chiefs.
Yes. So I'm Ryan Davis, the Chief Investment Officer of Input Output Global, labs company behind Cardano, and venture studio that spun out recently in December, Midnight.
Yeah.
And Midnight, looking in the privacy space, I sort of look back and say, where's investment gone?
Yeah.
What was 2025 about? It was kind of the year of privacy, right? Like we didn't really have anybody heading towards privacy, talking about privacy, then boom, 2025.
Yeah.
You rolled out a couple of different blockchains. Privacy became a focus.
Yeah.
Zcash did really, really well.
Totally.
Sort of opened eyes. So kind of tell me like why privacy? Why are we heading this direction?
I think it kind of started from the original ethos of Bitcoin, of Satoshi, blockchain 1.0, Satoshi's vision. It was kind of founded in that libertarian principle, right? So Bitcoin, Satoshi, it was really about the freedom of speech, the freedom to transact. No one could stop you from doing a transaction, right? That was kind of like that core principle. And that libertarian movement back in the day was very proud to show you, look, there it is. It's right there. It's immutable. It's transparent, and you can't say otherwise. So we kind of messed up. We didn't want to have that privacy side at the original beginning. I don't know why.
I think it was, when you have cross-border, you don't have to go through a bank and you can do a transaction with someone else in Amsterdam at any time of day, 24/7.
Right.
That was different.
Yes.
Right? And so you were dealing with someone you didn't know then.
Yeah.
I think the transparent part of that, there was some value, right?
There was, and that got us kicked off. You had, that was kind of like blockchain 1.0. 2.0 was like composability, smart contracts, and you have governance, you have scalability. And now here we are kind of like in that fourth generation where we're we're going back and righting that wrong that we did way back in like 08, I guess it was, 09 technically, which is to bring back privacy, right? So I used to manage billions and billions of dollars for clients, institutional clients, central banks, pension funds, sovereign wealth funds, and they value their privacy. Sending $2 billion on chain right now, so it's going to open a lot of eyeballs. People are like, what the hell's going on?
Mm-hmm.
And for as much as people shit on the Swift network, you know what the Swift network's really good at?
Yeah.
Privacy.
Yes, it is.
It might be a little slower, Might be some hands to kind of like you say yes or no, but it is private.
It's the reason that processes all of the money.
Exactly.
And the big money, the institutional flows of capital type of money.
That's right.
So what needs to happen next? I mean, okay, so we're going to have privacy in the blockchain space. We're sort of just kicking off, different privacy chains, which offer different things. So give me kind of like what are the range of these things? Where is this headed?
It's really kind of starting at the simplest form right now, I think, right? We have companies that want to use stablecoins to pay their employees. Very simple thing. Here's you performed a service, whether you're a contractor, employee, whatever else, and here's your remittance of that. Right now, you can all across the world, typically through a payroll processing provider or some kind of employee, payment processor bank. But the issue is like if they don't want to go through those old school intermediaries and they want to use the new school, which is like stablecoins, they're all public, right? So we actually have a company in our testnet right now that has 20 employees and they're using USDC to pay them.
Well, wait a minute. Hang on one sec.
Yeah, sorry.
You pay someone on chain.
Yeah.
Does that mean that if I know the distribution of tokens moving through the chain, that it's sort of like once Dan gets paid as CIO and then once Ryan gets paid as CIO, I might just know what money is headed Dan's way?
That happened to one of our friends, actually. The CFO of another chain had his wallet doxed. And they knew instantly, like, oh, shit, this is how much this guy's getting paid. Holy crap.
Yeah.
It was just people have a private life and they have a public life.
Yeah.
And this is why, it's up to you to disclose that if you want or not, but you need to start private. I'm right now selectively not telling you my salary. I could, but I'm choosing not to.
You could wear it on your chest.
Yeah, exactly.
Walk around the conference here in Miami.
Account number. So this is the issue. We have this company right now paying, 20 employees, and he's paying with USDC. So, the example is, he came to us, be like, hey, look, employee number 7, they got their USDC in their wallet, and then they went up to the wallet to see where it came from, and they see 19 other payments right around the same time. They put those into a little distribution, bell curve type thing. Employee number 7 sees that they're on the left side of that distribution, meaning they don't get paid as much money relative to their peers. And maybe that starts to cause some kind of issues internally. Or even DAOs. DAOs are all public. How do you fire someone in a DAO and have a severance payment on chain? You just set the mark for like disobeying or to set the mark for, hey, you're now encouraged to misbehave, so we kick you out because here's the payment you're going to get. We can't have that. We need private side.
No, absolutely. I think this is why privacy has become such a big topic. This is why, blockchain really embraced privacy in 2025, 2026. And
yeah, totally.
I think we see that, a lot of these, maybe all the blockchains will be private at some point in time. And that may be a couple years down the road because you're right. The public transaction is really only good for someone you don't know as a verification method that your transaction.
Yeah, and that's just more like, ignorance or something like, I don't know, like if I'm buying scalp tickets to go into a football game, I don't need to know who the person is.
Absolutely.
I just need a ticket, here's the money, and I'm going to go.
Yes.
Other people could have viewed that transaction, but for the most part, that's like a low value. No one really cares or whatever else, but it did take place. And you chose to do it in a public forum that other people could observe it. So
it's like the payroll example, I think.
Yeah.
I even look at that and say that's a necessary thing to be able to, pay people on chain, have the privacy element to it. And I look at that as like, that's that's one business and, has a lot of value to it. If you take that privacy into large institutions, right?
Yeah.
Like today, you and I both know, kind of having worked in and out or around the banking system, that, how many counterparties does a bank have? I mean, they have a ton of counterparties.
Yeah.
What are they doing? They're using strategy to have to deal with these other banks, which are their competitors.
Yeah.
And they're going to have to use a bunch of counterparty banks so that they're not going solely through one.
Yeah.
Effectively, the privacy there is not tipping their hand. I mean, if you had a poker hand, you're not going to be showing people your cards. It's all chips in the middle, right?
Yeah.
So you have these, very basic ideas which are needed on, sort of on-chain payroll, and then these large institutional ideas, like, these large institutions, they're into blockchain. They're using internal blockchain.
Yeah.
But what happens when they start moving data and money back and forth to each other?
Yeah, totally.
That's going to need to be private.
It's all signals. Absolutely. When you send $100 on chain, no one cares.
No
one gives a shit. You send 5 billion, 10
what's going on over there?
What is going on?
Yeah.
Or sort of leave a place. If there's like a bank or a custodian or whatever else, there's lots of value in there. All of a sudden it starts leaving. It's kind of like, you're sitting in a theater and the first person like gets up and runs away. You're like, that's weird.
Yep.
And then the second person gets up and runs away. You're like, 2 in a row. Are you going to wait for the third? Or are you going to be like, I'm the third. I'm out too.
Yeah.
It's a signal. It's always a signal.
That's right. So privacy really is enabling strategy. I mean, you can't really have strategy that's public. There's a reason why on a football team, like the other team can't go in your huddle and find out what play you're on it, right? And also, same reason why you don't show your poker hand to all the rest of the table while you're putting money in the middle. So I think it does. This is the necessary sort of next step in the evolution of blockchain is having privacy. Of course, you're going to have AML, KYC on either end to really have the institutional flows, right? But you have this pipe, and you can send data and money across this large quantities of it. And sort of check out what's happening on this side, AML, KYC on this side. Now, you can use blockchain for everything, 24/7. You can move money. You don't have to have 40 counterparties. And this is the situation where, you know, let's just talk about the biggest dogs, right? Like Morgan Stanley and Goldman Sachs clearly are competitors. They are competitors of each other, right? Like they are literally like the number one, number two, like, you know, who's bigger, you know, sort of thing. They still have to deal with each other, right? And there's no way they're going to deal with each other in a way where they're going to tip their hand or strategy or, you know. So this, it has to be the next step that we have to get there with this. The market for transparent transactions is actually quite small. Right?
Yeah, I think that's the case.
The market for private transactions is everything else in the world.
Yeah.
And I think that's what, you know, Midnight, privacy, this is what this is trying to unplug the rest of the world's business.
Yeah, we've kind of run out of the crypto curious and the crypto fanboys. It's been fun. We've done a lot of new tech. And we've kind of like settled on, okay, what does a blockchain need to be? What are the key features we want it to have? And the next one is like, how do you bring in that next wave of capital? Like those next big users. Again, we've run out of the crypto curious, the crypto fanboys. We need TradFi type investors. We need that big pile of cash, the capital to come in and realize they're getting some type of value in the blockchain Web3 space. I personally believe they're going to come in because they're going to be able to get different types of returns. Sorry, this coffee is like dead black. So I think that the tokenization efforts is going to create different types of return streams that'll allow these new investors to come in. There's a great example. I used to manage a lot of money for the Australian pension funds, and they had a problem, right, where they see like 5,000 different hedge funds. But my client told me, like, look, we only really have like 50 because the return streams are so correlated. We're dying for different types of exposure. And this is what I think blockchain can really do. Now, they're not going to move in 10 yards or 100 yards, whatever, on a public chain. They don't want to tip off their peers or competitors, right? So we need to solve the privacy angle first, right? And then we can start taking this blockchain down the open road and really letting it loose. It's that tokenization part.
Absolutely.
So my vision, what really we can do in tokenization, tokenizing T-bills is fun. Tokenizing some stocks, that's cute. Like, that's cool. That's a nice little tech project. Good job. Here's your, your participation ribbon. I want, and I can see us unlocking corporate balance sheets from these big, large conglomerates with tokenization. We did this in the mortgage world, mortgage pass-throughs. And one of the first, introduced us to was this German commercial real estate guy, right? And what he does is he goes out to the debt capital markets. He raises 10 million euros. He buys a building. He fixes it up. And down to the bottom line, the rental income is 30% yields. 30%. I said, hey, man, like, we should just do this in the blockchain space.
Yeah.
So now what you can start to do is you start to unlock corporate balance sheets. I want exposure to Diet Coke.
Yes.
I want exposure to Pringles, Ben & Jerry's, the F-150, the Ford Mustang, the Toyota Prius. Now I can start to customize precisely my types of exposure.
Those are the best investments in those conglomerates. Right? Like, I just want YouTube.
Yeah. That's what will bring in that next wave of capital because they get the different types of return streams, but they need privacy. They need confidentiality. They need the tokenization like engine, the stamper to come on. But it'll take time, but this is where we're going next.
Yeah. I think you and I, what we're seeing out there too, it's quite exciting with the enablement of privacy. Now we're seeing faster paced innovation across some of the bigger ideas, whether it's an AI or you and I recently have sort of looked at the private prediction markets, which I think we're both pretty excited about, right? Because like prediction markets are new in and of themselves. Obviously a big business with Polymarket and Kalshi and the rest of it, right? People don't quite know what to do with it, which probably means there's a lot of upside left.
Yeah.
And the fact that you can, in a private manner, start to build on top of these things, right? at least from my point of view, that's sort of like blockchain getting back ahead of things.
Yeah.
Not being behind or having to trail or retrofit, right? Because you're right, you can tokenize a lot of things that already have return streams, and when you tokenize those, you're kind of bringing it over from the left hand to the right hand, and yes, it's blockchain enabled now, but getting ahead of some of these things that are hot out in the market right now, like private prediction markets, I think is super fascinating. It feels like the industry is starting to, move back ahead rather than sort of, fall behind in that manner. But what else are you saying? I mean, obviously, AI is a monster topic.
AI is huge, right? I'll just add one thing on top of that. You know what? I think it really needs to be a feature that the consumer wants or not. It's a choice.
A button.
Yeah. So look, if I'm trading on Hyperliquid, that's all public. But if I click the night mode button, now it routes through midnight, private, confidential, whatever. You might have to charge a little extra service for that because you are getting a new feature set. You're getting privacy.
Yes.
How much would you pay for that? Oh, maybe whatever. It's 5 cents a transaction, 1 cent a transaction. Doesn't make a difference. But the user gets to choose. Do you want public, so people are trading against you, or do you want night mode private? And that's where I think we're going to be heading.
I love being able to hit the button, right?
Yeah.
Because everybody wants, even when you're talking about tokenizing these different revenue streams, investments, all of this is optionality for the investor, right?
Right.
Hitting night mode would be optionality for how you want to do business, what you want to, right? And the user experience is always going to fight for additional optionality, right? Because there can be upside and additional choices through each one of these things.
Yeah.
The
robots, let me just say, I love you, robot. Make sure when you're listening to
be nice to the robots. Very, very nice to them. That's right.
Just understand them.
Yes.
Their whole idea, though, is they're trying to catalog the entire history of everything ever.
That's right.
That's what they're doing.
Yes.
And then what I think they're going to do is they're going to pay for freshness of new data. This conversation right now, this is very live, it's happening this moment.
Yep.
How much would the robot, the AI agents, whatever, I call them robots, sorry, no offense. How much would they pay for that freshness? Do they want like a 10-second lag of that data?
Yeah.
They want a 1-minute lag, a 1-day lag? That's how you monetize them.
Yeah.
Their desire, they're just consuming information, consuming content. When you have things that are private, like on Midnight, through a ZK, proofs, you can start to charge them and monetize them. Oh, you want access to this? Okay, it's going to cost you a little bit more.
Data's worth something. Content's worth something, right? It's being created, new content, new data is being created every single day.
Yeah.
There's a value to that.
And they're going to want their own. They're going to, look, there's going to be AI like trading bots. And if the good AI trading bot has all of his trades on blind publicly, well, the bad bots are just going to follow the good bots.
That's right. Beta comes in.
You remember this? We were in Abu Dhabi in Conrad. And I just learned about this. This was like, 20?
I do remember this.
And I went down this rabbit hole, like 6 hours. I'm like, oh my God, this is crazy.
Agents were fighting with each other.
Yes, they were. Right? Exactly. I was like, what is going on? Like, I don't understand this. It was a little bit ahead of its side, but it's definitely here now. So those agents who are trading, they want privacy. They're going to want to have the private side of their trades.
Yes.
Because then what you're going to be able to do is you're going to have in a wallet, I want to rent. I want to lease this robot, this AI agent to go out. And he's like, I can only give out 100 uses of my trading ability.
Absolutely.
You're going to see this coming in, but it has to be private.
Well, if it's not private, right? You and I both know what happens with investments.
Yes.
It just all turns into beta.
The alpha gets eaten away.
It's
absolutely
right.
Correct.
Yes.
Absolutely.
And that's going to make your robot mad, right?
Yeah.
Can't perform as well. Whoever's behind the road. I think another topic that you and I kind of have seen as very necessary, it's necessary now.
Yeah.
Because these agents are going around, you don't actually know what's happening, who's doing what or why.
Oh, yeah.
Like, whose robot is that?
No, totally. So KYA, I think it was Ribbit Capital wrote a great paper on KYA, know your agent.
That's right.
Will be infinitely more important, larger scale than KYC, KYB will ever be. There will be so many agents. You and I will have, I don't know, 10, 20, 50, 100, whatever. They'll all be compartmentalized to do specific things kind of tied to us through some like legal proof of, yes, this robot does represent me to go do my thing.
That's right.
Yes. It's all coming here.
Yeah.
Now, there's a lot of hype. I just want to make sure that
words versus
there's a lot of
actual use case and utility, and the rest of it has to be real.
So what kind of brings clients on chain? I think it's really the privacy. Why haven't they moved? It's because, one, there's the regulatory hurdle. Okay, fine, sure. But two, it's just like they need to make sure that there's the tech is sound. right? We have this whole scare of quantum,
That's right.
everything.
Yes. Future risk.
But we also need to make sure that they're not giving out additional information to their peers. I used to manage billions of dollars for a two-letter large government agency, and they had four different managers doing the exact same investment strategy. And the reason they did this was to get different types of information back from the four of us. Now, I was one of the four, and I didn't know the other three existed.
Right.
So one day when they told me, I'm like, oh, that's why it was so difficult for me to trade, because I was trading effectively like three other guys doing the same thing.
You're getting four different plays. Like that's sort of, they have an advantage right there.
Yeah.
You don't know you're giving it to them. The other three probably don't either.
Exactly.
You get to sort all of it across. Like, why didn't I win on this? Well, the guy in the middle was able to.
Exactly. The asset owner, he knew he got to see everything. That was his choice.
Yep.
It was choice not to tell me, and it was his choice to tell me eventually.
Right.
So it is something that you see even in traditional space where there is private side, even in contracts, right? Like,
Sure.
here's how much I'm paying for this mandate.
Right.
You can't do that.
No.
Right?
No, of course not.
Because then the guy who's charging more, he's like, well, wait a second, I want the lower rate.
Right.
The lower rate.
Right.
You need to have private negotiation.
It's almost like on-chain rights. Yeah, which obviously comes down.
Right. Yeah.
Right now, you kind of don't have those rights. It's kind of like you got to walk out naked and say, "Hey, look at this what I'm doing." You know what I mean? Like, it'd be nice to like wear clothes when you do stuff, and then like be able to talk to people in some sort of private way, move data, move money, have strategy enabled with what you do.
Yeah.
And when that day comes, I think it's sort of like the possibilities endless. You could now you can really create, and that's some of the things that I think you and I are seeing is all of this new creation happening right now. On the investment side, too, I think what's interesting, we're sitting here at Consensus Miami, is a lot of the really cool building happens, I'm just going to say it, in the down markets. Some really exciting things happen when markets are down. These crypto bull runs and kind of bear markets, like the capital is kind of, gets a little bit cut off in down markets, right? But you and I both know from an investment perspective, generally the best time to invest is when those markets are down, you get better valuations, there's much more upside, and there's humongous winners that come out of these things and end up dominating markets. I saw a lot of this when I was CFO at Pantera Capital.
Yeah.
Sort of the first layer of investment was, investing in tokens or what used to be ICOs, early stage token projects. Then the infrastructure layer came. Now I kind of walk across this conference and say, wow, the money we put in, like these guys are behemoths now. It's kind of made it to the next level. And I'm kind of looking at this time right now as, it is certainly difficult, like with what's happening in the global economy. Obviously, crypto markets have been down a bit, but I've always viewed these as golden opportunities.
Yeah.
This really, really is.
And this is the new tech. So it's like a complete white space of new companies yet to come. These companies, you could invest in some partner type companies that are tangentially needing privacy, but this is just going to be flat out brand new company.
Absolutely.
On-chain private banks, private custodians, private payroll, private prediction markets, private everything. It's just, this is what we're really seeing. I mean, and when we're kind of like talking about what brings investors in here, there's also just like new use cases. So you will be able to have inventory, supply chain tracking. You'll be able to have private DAOs. There's a company in our test net, maybe in their production now. They're in India, the country of India, one of the largest states in India. They have lots of crime. And so what they want to do is actually track the criminal records from collection to the courthouse through that chain of custody. And they want to use blockchain. For the real true reason of why you use blockchain, it's immutable. You cannot change it. That's the true premise of blockchain. But they also want to make sure that the records are private so that no one can see what's actually happening.
Right.
Through that value chain.
It's important.
It has nothing to do with like investors at all. It's just like an actual good use case for blockchain, good use case for privacy, and there's criminal records that are helping to hopefully have a better outcome.
It's all kinds of possibilities, I think, in terms of what's investment versus what's just good use case, just in your sort of case on the criminal records, what should we just do, right? Medical records is another space, which, it's a complete mess. Medical records has been a mess. Information sharing across medical records, longevity, we could do something for humanity right now just by improving medical records and the movement of that.
I mean, I think consumers are they're going to start to demand.
It'll be worth a lot.
Well, consumers are going to demand, I want to know where the source of those ingredients came from. I want a proof. I want to be able to click a QR code that goes to a proof that the blockchain says, hey, look, this thing right here, right?
So what is that?
It's one of those it's caffeine pouches, kind of like Zyn.
Cool.
It's for caffeine, actually. But the consumer's going to be able to scan a code and be like, what are the ingredients that are actually in this?
Yeah.
India, they come from China.
That's right.
I want a blockchain that has, knowledge of this through the whole value chain of, collection to creation to consumer.
Yep.
And they want to use a blockchain for it. That is a good premise of using blockchain. Public or private, I think they'll choose private, but maybe they won't. I don't know.
Well, I think they'll choose private as well. But all of these new companies, I think there is a blockchain back end for the utilization of data, information, the rest of it. What else are you seeing on kind of the privacy side in terms of, like, we have AI, but what else is kind of exciting you these days?
On the privacy side, this one's kind of like, you will see the most boringly stupid, like, oh, I guess so, we could do that. There's a large company in the U.S. wants to put their employee handbook on chain.
Yes.
Incredibly boring.
That is.
But you know what? It's a real thing. I want to, I will have whatever. Let's say it's like company XYZ app. When I'm an employee there, okay, here's the employee handbook on our app, on chain. There's a proof when it was updated, when it was not updated. I'm telling you, one of my previous places of employment, like, HR came back like, no, it says it right here. I was like, when did you change that? I didn't see you change this. I was supposed to be like, it's supposed to be once a year changes. This was changed intra-year. Like, I didn't sign up to that policy. So these are the small little edge cases that I think blockchain kind of help. That kind of just brings in more just like adoption. I think eventually it'll just be like in the background. You won't really know, but consumers will have that. Like, if you ever want a question, like, I want to be able to raise a question like, when did you change that? The blockchain will be there to...
Yeah, well, there's a super sexy things like private prediction markets. And the use case that you're talking about, I hear you on that. The handbook is like, you would think that's boring, but that's going to be useful, right?
Yeah.
You and I have both been in kind of licensed trading arenas before where you have compliance that you have to do. There's tests you have to take. There's trainings you have to conduct.
Yeah, that's
to be able to keep those licensure, right?
Yeah.
Keeping all of that on a blockchain, ensuring that it gets done. I don't know if that HR department needs to happen anymore after the blockchain started tracking all this stuff and you have your licensure up to date and you've done your compliance or your learning or whatever you need to do, continuing education, all of these types of things you may say boring, I don't know, but useful. And then sort of like when you look at like, what's the total market for that? Right? It's enormous, these use cases. So
it's just a slow grind that direction. All of these conferences that I go to every single time, sorry, crypto bros, they're just more guys in suits and collars.
Yep.
That's just the way it's going.
Yeah.
In New York DAS, we call it suit coin.
I'll go from hoodies to the suits and just get the suits in there.
Suit coin.
Yeah.
Sorry. It's just the tech though, right? Like it can play, again, it's not just like bringing investors from like financial capital. You can also apply this directly to a casino. I spoke to a casino operator. I was like, telling them about midnight. Hey, wouldn't it be really cool if you could have users come on and they already had their KYC done, you knew their age, their region, maybe their wealth, potentially even their skill. Wouldn't you like that? If they're going to be going and playing blackjack? He goes, yeah, absolutely. I go, great. Because the player wants to know that there are 52 cards, that they were shuffled correctly.
Absolutely.
And that there are no duplicate.
Yes. You know that I play poker from time to time, right? I've certainly played online. You sort of look at that screen and say, is this game rigged? That's all I want to know is that it's fair.
He said,
it's not fair, I don't want to play it.
He said, I don't like that.
Yeah.
And when I know you cheat. I know there are duplicates. I know you kind of stack the deck to make the thing turn over a little bit more and blah, blah.
You could have 3 robots at the table all working for the bank. You know what I mean? And then they're all working against you. Like, good luck winning at that table. You know what I mean? So, all right, as we kind of close out here, what else? 2026, what's coming up this year? Anything else like in sort of the privacy space? I mean, you and I are involved with the Midnight Ecosystem Fund.
I think that's the biggest thing. It's just the new companies that are coming. And this ecosystem fund is going to have like tip of the spear type exposure to getting access to the brand new companies that are like yet to be created. Yeah. It's kind of like the companies right before Ethereum was created, right before, Amazon was kind of created. You're right there to get this exposure because this new tech brings a new feature set of like what's possible.
Yeah.
And that's what I think is really exciting for us. So yeah, we're, out there raising capital, telling the story at midnight, and then deploying this capital.
Yeah, I agree with you. It excites me as well because I see this. You and I see these new companies, right?
Yeah.
You know they need to be built. You know that they're necessary.
Yeah.
It's just about to happen, and I think it is. It's really the capital will go to the access of building entirely new companies, right?
And they're not like token companies. Sorry, crypto, but like...
Yes.
This is real, positive, free cash flow type companies.
Yes. This is a real business that has to exist. And in the business that needs to exist, it actually moves money and flows into blockchain, right?
Yeah, that's what it is. It's about consumption. You want to consume. It's the whole world, society all over is about repeat turnover and velocity of coming back and doing it again, again, and again. Yep. This is what we need to see.
Yeah. Well, Dan, this was super cool.
Yeah, thank you.
Getting a chance to do a podcast. Yeah, I know. Yes, we do all of our digital talks and our pitches in person and all of this sort of thing. But yeah, we should definitely do it again.
Yeah. All right. Well, thank you.
Thank you.